Hello, members, one and all of the Salivation Nation, with an opinion piece that I thought was quite interesting and asked a great question about why gold prices are rising with a crazy high stock market. This comes to us from the Quad City Times, and this is an opinion piece by Mark M. Grywaczewski. And gold is considered a hedge against market turbulence. In times of uncertainty, it serves as a global safe haven, a constant that has always held value as a tangible asset. Historically, the price of gold is driven higher when investors seek safety and shelter from market risk. So since establishing a 5-month low of 1241.70 on December 12th, gold has surged more than 6%, approaching the 2017 high of 1355.30 set last September. And I will also note that it has been predicted by Angel P Music, who comments regularly with predictions, confident predictions, that the prices will go up and it will reach 1350 again, probably this week. But what has been driving investors into comfort of the yellow metal? There doesn't appear to be much of any uncertainty in the stock markets, just a continuing pace of new record highs. In 2017, the S&P 500 gained 19.4%. The Dow Jones Industrial Average rose 25.1%, and the tech-heavy NASDAQ Composite Index gained a hefty 28.2%. In the first week of 2018, in just 4 days of trading, the Dow gained 2.33%, its best start to a year since 2003, a year in which the Dow rose 25%. The S&P 500 and NASDAQ also had their best start since 2006. The stock market have also been free of volatility or significant pullback. In fact, the volatility index, the preferred gauge of measuring volatility and uncertainty in the stock market, recorded its lowest yearly average in history, known as the fear indicator. The historical average of the VIX is around 20, but in 2017, the average index measure was just 11.09. I've actually done a video on that before, reflecting record period of calm in the stock markets. So despite the rise and relative calm of the stock markets in 2017, the price of gold surged 12%. Furthermore, this surge was in an environment of rising interest rates. The Federal Reserve's 3 hikes on the benchmark Fed fund rate in 2017 are seen as a precursor to 3 more rate increases this year. Gold prices are extremely sensitive to changes in interest rates, and we've covered that before as well. As interest rates rise, gold tends to decline. Since gold bears no dividend or interest payments, when interest rates increase, investors typically shed non-yielding assets such as gold in search of higher yields in other types of investments. And the flood of investor cash into gold suggests an underlying anxiety in the sustainability of stock market gains and the continued health of the U.S. economy. Despite an exceptionally strong labor market and growing U.S. economy, skeptics point to the historical record of economic performance following a cycle of interest rate hikes. According to Fed data, of the 19 interest rate hike cycles dating back to 2014, 16 have ended with the U.S. economy in a recession. Obviously, the past is no indication of the future. Stock market proponents remain bullish, citing the recent signing of President Trump's tax cut bill, expected to further boost corporate profits and economic growth. But the Fed's rate hike agenda will indeed temper economic growth, as the rising cost of short-term debt curtails consumer spending, the key driver of the American economy. The Fed insists its rate hike agenda is necessary, that a measured pace of rate hikes provides a gentle tapping of the brakes on a growing economy that prevents it from overheating. Skeptics maintain their doubts on the Fed's ability to implement the rate hikes without significantly disrupting economic growth. For now, that concern continues to be satisfied in the comfort of gold. So, very interesting indeed. It's So it looks like there's some concern. In fact, our very own $5 expresses high confidence that we're going to see some pretty hefty inflation coming soon. And I've always said, and I still believe to a point, although I don't want to sound defeatist, that no matter who was to win the presidency, we were going to see another recession. We're long overdue. Typically, recessions happen in periods of, uh, 8 or 9 years, and we're well past that uh, between the last recession. And so I think that we're overdue for one, and it just may have been postponed by the actions of the Congress and Trump with cutting taxes and the like, and the overall psychological effect thereof. But what's going to happen when that effect wears off? The highs that we saw in the stock market leading up to the tax cuts were sort of baked in, so to speak, but they're continuing to increase. And so, what will happen after that wears off? After we're into the tax cuts for quite a while, how will the markets react? And the dollar is relatively stable and strong now, but we have other forces, geopolitical forces, as well as geoeconomic forces of other nations, the BRICS nations. How is that going to hold out? What's going to happen there? So what are your thoughts? I think it's great that people are seeing the value of gold still. It still has its luster. And I've thought, that 2018 we would see gold go up some. And I believe it still is the case. And this is another indicator, according to this opinion piece. So it's quite fascinating to see where it goes from here and how it will play out by the end of the year. The other factor that this article doesn't mention is the cryptocurrencies. And I think that's probably one reason why we haven't seen gold rise any more than it has, is because a lot of people are starting to invest in the cryptocurrencies. But the other thing is for people like me who feel sort of overwhelmed by the cryptocurrencies and all of the exchanges and markets and all the different kinds that are out there, and where to put your money, has the major ones kind of topped out, or there's a room to grow? It's anybody's guess. It's all a gamble, really, when it's all said and done. But the simplicity and safe haven of physical gold and silver, that provides a pretty much a no-brainer. We know what they are. They have a historical track record that is unmatched by any commodity or any investment out there. And that's kind of what is attractive about the precious metals, and of course, I understand people buy the paper assets, the electronic version of gold and silver, and because they are based on the physical, even though there's not enough of them out there to cover, if they were to cash out, if they were to try to redeem their electronic versions of gold and silver, there's certainly not enough there when you're trading in futures to actually to trade out. But people like me and others here in this community, we kind of look at it like, what? Let's just grab the physical, because we know that we're protected and we can always sell it if we need to, and we're not going to lose the intrinsic value thereof. We may lose somewhat of the premium and maybe some of the spot price, but it is, for the by and large, the most part, it's going to maintain its intrinsic value, and that's what protects us in times of economic hardship. And in fact, I kind of like this language here, where the author here mentions that gold is considered a hedge against market turbulence. I kind of like that terminology, because a turbulence is something we all have experienced in our lives. It doesn't mean there's a crash. When you're in an airplane and you feel turbulence when you're flying, that doesn't mean you're going to crash. It just means that, it's a little bit shaky up here and there's some volatility, and you typically hold on to your seat when that happens. Well, that seat is gold. It's that seat's not going anywhere. It's something you can kind of hold on to. And really, and also the case, using that same analogy, air is what keeps the plane up. It actually takes some effort to crash an intact plane. So the fuselage, as long as it's intact, it's got to stay in the air. So the turbulence around and the markets and the instability of the markets, well, you just hold on and you'll get through it. And gold is that safe haven that does that. So, an interesting article. And what are your thoughts about it? Do you think it's on base as to why the price is rising? In all of this, do you think that we're in for a recession or more economic instability? Post your thoughts below. I'd like to extend the multitude of gratitude y'all for watching and encourage you to please rate, comment, and subscribe.